Happy Wednesday. What's going on, guys? It's Ricky with TechBit Solutions. And a question a lot of investors were asking today is, what the heck happened? NASDAQ market out of nowhere, about 15 minutes, if I'm not, 30 minutes before the market opened, we saw a significant retracement on QQQ, but it was led by Microsoft. And this is a question that a lot of people were asking. Well, what exactly was shared? Well, it looks like they're actually taking it back. Originally, what was shared was that a news outlet claimed that the tech giant cut its AI software sales quota. So pretty much whatever it was originally expecting of what it was going to spend when it comes down to AI, it was reduced. And that is, again, a big concern right now for the market. Are companies over-investing? And as Microsoft began to sell off, this wasn't a substantial drop, but it's a 3% drop, right? 2.8, almost 3% for a $3.58 trillion company. So you could see the influence that Microsoft has and how delicate the market is to this kind of news. But I want to provide an update for you guys. Although that was the news that was originally shared, it now seems like it was not true. Microsoft has not lowered its sales quota, according to CNBC, is what is now being, shared. That being said, it looks like NASDAQ and Microsoft are still struggling to recover from the uncertain news. I just wanted you to understand the why, based off of what news was shared, what caused the sell-off, and then the recovery and what led to it, right? Other than that, I also wanted to share the news that the ADP jobs fell 32,000 in November when the expectation was a gain of 10,000, the largest drop since March of 2023. This will push the Fed to do more than, this is what this account is saying is, this will push the Fed to do more rate cuts as job market is looking really weak right now. Now, when you go on over here to the Fed rate monitor tool and you update it based off of today's most recent, update, it now went from 86% to 83%. According to every other crypto platform, they're all saying, no, the Federal Reserve now has to cut rates because of how weak the labor market is. And don't get me wrong, we're 1 week away, December 10th, from the FOMC rate decision, where there is a very high probability that the Federal Reserve is likely to cut interest rates once again. There's only a 16.2% probability that the Federal Reserve, according to this Fed rate monitor tool, that the Federal Reserve will pause. But the thing that I want to remind you is that will the Fed actually cutting rates actually create a stronger labor market? Because it's more than asking why is the labor market so weak? And it's not necessarily because rates are too high. And although that might be the case in some scenarios, it doesn't seem to be the story of 2025. With this whole AI revolution, it seems like a lot of jobs are being replaced with AI. And on top of that, with the mass deportations that we have seen, it's not much of a surprise that we have seen a slowdown in the labor market. Nonetheless, the very simple answer, in my opinion, is, well, no. Why would cutting rates help the labor market in any way with what we are currently experiencing right now if it's not the reason that we're actually seeing such a weak labor market? Vice versa, the thing that I wanted to share is by cutting rates more aggressively than what was expected, as Jerome Powell has said, can cause inflation to grow quicker and create a bigger concern for the stock market and the Federal Reserve. Remember, that's the two mandates that the Federal Reserve has, is a strong labor market, but also price stability, inflation. And they cannot do one without hurting the other. So at least in the last meeting, Jerome Powell stated that as long as they don't have clear economic data to support rate cuts, they will not be cutting rates. But the market is getting ahead of itself. It's already expecting that the Federal Reserve is going to cut rates in the month of December. So we'll see, right? We're about a week away, 7 days away, according to this Fed rate monitor tool. December 10th is when the FOMC rate decision is going to be. And that's at least a very exciting thing to kind of look forward to next week. A lot of volatility based off of what is expected versus what is actually reported is set to be factored in. On top of that, I think it's really important to note that if you are feeling that markets are kind of struggling or lacking progress, you shouldn't be afraid to take advantage of any opportunity that you see, right? Long or short, whatever that might be. Just please be careful with leverage because of how volatile markets can be, especially right now, and especially with what we saw. I mean, this isn't a very volatile stock. It's Microsoft, right? But with the big shifts that we are seeing present themselves, I think this is a great reminder to not be scared, but to definitely not be trading on borrowed funds. Just make sure that whatever dollar amount you are choosing to trade with is actual money that you have and not money that you are leveraging during an uncertain time for both long and for short. I think that's a great encouragement for beginners, especially during a possible uncertain time. Again, one of the trades that we took today was a short on MSTR, and that was in today's live trading session. I trade live with my LPP team every single morning, and if you ever want to tune on in, it's the second link in the description down below. We made a few $1,000s shorting MSTR. I reopened short, direction turned against me, but then now I'm adding more to it as direction becomes favorable. This is just my opinion. I think BTC is overbought. I think that if BTC breaks below 90,000, MSTR is going to continue to crash as there's so much pressure for MicroStrategy to possibly be forced to sell Bitcoin. And if they do begin to sell Bitcoin, not that they will anytime soon, at that point, I believe that they can cause a crypto collapse like we've never seen before. So very excited to follow up. Obviously, I'm putting my money where my mouth is. I have an open short position right now, but let me make this very clear. I'm not like other people. I'm not like other accounts. I don't want you to copy what it is that I'm doing. This is a high risk trade. I like to close my trades every single day. They're day trades. So one moment I might be going short, another moment I might be going long. If you're not part of my LPP team, then again, you are not receiving the most up-to-date trade updates from what it is that I'm doing. So please do not trade do not trade what I'm trading just because you are watching this video. I just like to share my ideas and then follow up. Again, if you end up watching my videos or if you're part of my LPP team, then you get real live market updates. So again, whenever it is that you're ready, if you want to watch me trade live every day, if you want access to the A to Z video lesson library and the private group chat, it's going to be the second link in the description down below. You can get $300 off right now. There's people that signed up back in 2018 that still watch me trade live every single day today. So whenever you're ready, second link in the description down below. It's a one-time payment for lifetime access, and I'll see you tomorrow at Market Open for our live session. Like always, let's make sure that we end the year on a green note. Take care, team.